Hello, fellow Rebel Capitals. Hope you're well. Silver and gold make a huge turnaround, but there is a problem. Unfortunately, there is a problem. Let me do the screen share and let's go over to CNBC, find out exactly what's going on here. Let me refresh. And as you guys, I'm sure, know, we have had a huge crash in silver and gold. We'll focus on silver because that's the biggest move. And in silver, at one time last week, I think Thursday, it was up over 120 bucks. And then it absolutely plummets to the point, I think, where it got down into the low 70s, something like that. But then today, it's ripping higher. As of right now, call it 3:38 Eastern time, we're up over 10%. 10% on the day. Gold up 6.57. Now, I'd like to remind you guys about the whiteboard video I did last week where I was talking about a prediction I gave that we would see a lot more volatility in silver, and that's exactly what we've seen. Now, let's go over to the problem, unfortunately. And then what I'm going to do is I'm going to reveal a new strategy I just used for my own personal portfolio, not paper trading or anything like that, real money, where I made over 10% in the last day, over 10% in the last 24 hours. And I'm going to share that strategy with you right now on the live stream. But if you guys are Rebel Capital's Pro members, you already know what I'm going to say because it was part of the trade alerts. You could have followed along. But let's go over to a chart of SLV. We'll use that as a proxy for silver. Now, as you guys know from watching my recent videos, the normal candlesticks look like this. So little teeny weeny, little baby, little cute little candlesticks here. And then we start getting bigger and bigger and bigger. And then we start gapping up, going completely parabolic at the beginning of January. And then you have these huge, massive, massive gap ups here. I mean, this is craziness. Crazy, crazy, crazy. And then we had... this is SLV. Okay. And I was, at the time, I was long the PSLV. It should be similar here, maybe slightly different. But then I right around in here, or the equivalent in the PSLV chart, I sold because just these gap ups were getting so extreme that I was getting a little concerned there. And I reflected back on that Jim Rogers trade where he talks about 1980, how he shorted gold and it was literally gapping up. And in 2 days after he put on the short trade, it went against him by like 15 or 20%, but he held on. And that turned out to be a good move. So then we see what happened Friday. We all know about that. And then yesterday, what I thought was really interesting is we have another big down day. We open, God dang it. I should just log in every time I do these videos. But we open here and it goes all the way down to call it 68. Again, we're just using the SLV as a proxy here. And then it goes all the way back up into the close, But this was after this huge, massive, massive, massive down day. And so the strategy that I used is I'm like, okay, well, there's a lot of volume that's buying the dip, so to speak. And it's closing very close to where it opened the day. So for me, that was a really good sign, especially after this huge down move where you go from, 109, call it, all the way down at one point to 68. And then the move up. So what I did is I went ahead and bought right at the close yesterday, call it 72, 70, 60, something like that. But then what happened is it gapped up. It gapped up today where it opened right around 78 or so, just using this chart, just eyeballing it, maybe 79. And just prior to the open, I looked at the account. I saw that I was up like, I don't know, 10% or 9.5% or something like that, something ridiculous. And I didn't have time to watch it. So I used a strategy that I've never used before. And it worked extremely well. In addition to, of course, kind of having some good timing here and looking at the price action into the close and predicting that it would gap up the next day, which it absolutely did. But before I get there, let me go over what the price action is doing today. So we had a high up here around 80, 85 or so. Then it goes all the way down. Then it comes back up to where we are right now. But see, this is a problem because a candlestick, when you come up, the bottom line here is I think this could be a dead cat bounce. That's really the punchline. Because you've got this big move up, which is great, but that just could be all the short sellers selling and or having to buy back and taking the price up, and then we'll have to see what happens into the close. Because into the close, if this starts to go down, right, and let's say we finish around, I don't know, 76.50 or so, that would be the no bueno zone. So that's why I say that it's fantastic, because I'm assuming most people are bullish silver here. It's fantastic if because we had this bit of a reversal and we had this turnaround, but the problem is this is not a green candlestick. This is a red candlestick, and a red candlestick going up is way, 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 way different than a red candlestick here, where you get all this buying into the close that proceeded a drop from 110 all the way down to 68, call it. Much, much, much different. And that's why I'm not a big technical guy. There's a lot of fundamentals. That's kind of why I start with is my macro view. But sometimes I'll just do these quick short-term trades like I did, and when I see an opportunity. But the point is, there's a lot of information that you can derive from these candlestick charts. You really, really can, especially when you add in the volume. And I don't get into the moving averages and all that stuff, but I do look at kind of support and resistance. And then I do follow, kind of try to just let the chart tell me what's going on with market psychology. And that's really what I did yesterday. And that was the first step to the, just overnight making 10% plus. But the hard part, as you guys know, about trading and investing for that matter, isn't necessarily when to buy. It's more so when to sell. That's the real hard part. So that's what takes me to the last part of this new strategy that I use that I'd never done before. So pre-market, it was trading around 79. So at this time I was way up, because let's say I bought it 72.60 or something like that. So I'm way, way, way up just overnight. But I didn't have time to watch it. So what I did is I put in effectively, I don't know what it's called, but put a stop at 80, so above where it was. And I put another stop in at 78. So if it hits 80, then I'm out. And if it hits 78, I'm out. And I've locked in just great, great, great profit for just an overnight trade, which is what it was to begin with. More so just kind of a speculative gamble. And when we opened right around here, but then it shot straight up. I got hit right at 80. So it automatically sold the whole position. And so, that's how I locked in that 10% plus profit. And it's what was nice about that, looking in retrospect, is a couple things. Number one, putting those two stops in, so you can just go on with your day, and you've already decided where you're going to get out, and then you just let the platform do the work for you. And then it takes a lot of the emotion out of it, which is the number one killer, let's say, in trading and in investing. It's your own emotions. It's what goes on between the two ears. That's your biggest problem. That's everybody's biggest problem. And number two, what it made me realize, and if you guys are Rebel Capitalist Pro members, you know this, that my portfolio over the last year or so has done incredibly, incredibly well. And the main thing I attribute that to is being able to spend time in St. Bart's and hang out with guys like Hugh Hendry and other individuals that are, some of the best hedge fund managers of all time, and that are much better at trading than Hugh. In fact, there's one gentleman there, I always call him Steve. Hugh calls him the best trader that he's ever seen in his life. And that's saying a lot because Hugh has met Stan Druckenmiller and most of the legends. So what I learned from, we'll call him Steve, is that Steve's got all the bag. He's got all the tools in the bag. He's got all the tricks, right? So a lot of people say they're a value investor. And prior to this year, I would say that I was a value investor. I just buy things when they're cheap and sell them when they're expensive. Well, Steve does that as well, but he also has about 100 other things that he can do extremely well. And sometimes he'll just see opportunities in a little short-term deal, and I've seen him do that. And I've seen him have see opportunities in longer-term deals and do that. And sometimes because of value, sometimes momentum, sometimes it's charts, sometimes it's fundamentals, sometimes it's a combination of the two. So my point there is he doesn't lock himself in to just one strategy. He's really, really good at like 100 different strategies. And therefore, he's got a lot more opportunity. So whenever he sees something, he can say, hey, I'm going to dive in and capture some profit here. Where if he was just a one-trick pony and just a value investor, let's say, then what do you buy? Right? Because there is no value in the market. Well, maybe you could argue oil or producers or maybe some offshore drillers or something like that. But there's, especially in the S&P 500, if you just look at stocks, there's very, very few, or there's very little opportunity if you're a value investor. So that's another thing that I really, really learned, that I attribute a lot of the success that I've had over the last year to watching Steve and saying, oh, wait a minute. Okay. You got to be good at more than one thing, especially in these types of markets where we see all of this volatility. And just adding another little trick to the bag, or another little tool to the bag here by playing this type of, I don't know if you'd call that psychology, that's reflected in the candlesticks, and then making sure that you optimize it by taking the emotion out of the equation. That was really the lesson for me, and that's what I wanted to share with you guys today, other than just the news that silver had a big turnaround, up now. Let me refresh here. Up now over 10% still. So very, very good day. And, when you look at this type of chart, it doesn't tell you the whole story. In fact, it tells you very little. When you look at this type of chart, then it gives you much, much, much more information. Just knowing what the price action did throughout the day, where it opened, where it closed, and where it is relative to the price yesterday. Okay, guys, if you want more insider intel, because what I do in Rebel Capital is pro the community here. It's hosted on the school platform. Is I do these trade alerts, and here's the one right here. In fact, where I sold SLV at 80, and I kind of explain why. And then the day prior, you'd see where I bought SLV, and I do these trade alerts whenever I make a change to my portfolio. And so if you're a Rebel Capital's Pro member, you can follow along with these, and you get the insider intel, research from Lynn Alden, Chris McIntosh, live streams with the pros like Patrick Sresna, Brent Johnson, etc. So if you want to check it out, Josh will put a link in the description below and in the chat. All right, guys, enjoy the rest of your afternoon. As always, make sure you're standing up for freedom, liberty, free market capitalism. We'll see you in the next video.